Hello, it's Dave Knight here from 123daytrade.com. Thank you for watching. Thank you for being here. Let's talk about volatility today. So a bonus video. Let's talk about the concept of volatility for a little bit and range of trading. It's a concept that I have thought about for a while, and now I'm coming to a conclusion about how I want to approach it. One of the hardest trading days to be in is a range-bound day. At least a range-bound day for me is one of the toughest trading days that I know, because the market can go, basically, you know what it's like. It goes in a sideways motion. It goes up a little bit, it goes down a little bit, and it really ends up in a range for the trading day. If you can't escape and say, I'm not going to trade those days, then how do you approach it? For me, this is how I've defined it. I called it low volatility, and on the spreadsheet I use, I'm assuming anything, I'm even thinking about as high as 1.75 right now, but 1.5 ADR or lower, like today was, for me, was 1.38, so that was below the 1.5. So however you determine your volatility of your volatility measurement, hopefully you can figure out your own mathematics behind your own strategy as well. Anyway, the average long move is about a 2p move, and the average short move is a little bit longer, 1p by 3p. So in today's terminology, with the 1 point, if we use that 1.38 on the ADR, it worked out to be 33 ticks on the long. It was, and then I had a high volume spike bar come up, and then we had 51 ticks for the short. Now, as far as entry points go, the long that I got involved was at 9:26 a.m. CST at 6:001 or 60.01, and the short, you want to look back at the short. The short was at 10:02 at 60.25. The problem with the short, once again, is determining, once it got in, it went 14 ticks and knocked me out at 60.39. What was the high of the session? 60.39. So the ADR plus maybe looking back at the prior high of session, or at least going back to the prior high of whatever the movement is. So even if I would have put it at 60.40 today, I would have stayed in that trade. So long story short, I ended up catching a long for about 19 ticks, and I gave back 14, and I ended up with 1 plus positive at +6 today. But I looked at the trading that went on, and I thought to myself, what, I didn't want, here was the issue that I ran into, and this is the epiphany, I guess, and it came out. I got into what I called the long, a long on 5 of these little, I call it the 5 right now, and I'm doing a video on that, and I'll probably put that in my day trading tips so that you can see what I'm thinking about, and then you can utilize that as well and maybe apply it to your own trading. But it's called I'm just calling it the 5 for now, and I'll show you what that looks like once I finish working on that video content that I had recorded today. But the short signal came out because it became the highest volume bar on the short side. So it was a good reversal, although I was long at the time. And this is the issue that I run into in low volatility an awful lot. I'll be in a trade, and the reversal signal comes up, and I'm like, and I'm hoping, I'm wishing, I'm praying that the market continues to move, but the volatility measurement isn't high enough. In other words, we don't have enough oomph or contracts or people participating to drive the market at this point in time. Now, I don't know, I haven't figured it all out. I'm obviously not a rocket scientist, but what I can see is, looking at these kind of range bound days, that sometimes they go up to a certain point and then come back off, go down to a certain point and then they pop off of that, and it just sits there like this. And more of these days happen when volatility is low. So my thought process at this point, until it breaks out of a range bound area, perhaps the best way to approach it is just following what and when I went into it, when it did reverse itself, when I was long coming into that move. If I wouldn't have been long, I would have been short from 60.25 and taken it down, and hopefully I would have caught 51 ticks on the way down, even after a 14 tick loss, and then whenever that difference would have been. Anyway, I just thought I would share that with you today, as far as what I'm noticing, what I'm seeing, and maybe you can help me apply some of that information as well in your own personal trading. What do you see? Again, Dave Knight here from 123 Day Trade. Thank you for watching. Thank you for being here. What are your thoughts on low volatility, and how do you handle it? Talk to you soon. Bye now.